Do you know you can reduce your taxable income by 1.5 lakh using section 80C as a deduction method? This is just one of the 15 ways which I'll be talking about in this video. I promise you, after watching this video, your views on tax will be completely different. You'll be astonished to see the different ways and different methods where we can actually save tax. Before we go any further, it's better to know a few terms like taxable income, exemptions, deductions to know what I'll be talking about in the next part of this video. If not, you can watch the videos in the playlist all about tax on the I button here. Alright, let's get started. Section 80C is the most popular one and the most extensively used one by people to save tax. Our Indian government supports a few tax saving instruments like NPS, NSC, PPF to help us as an individual to save and invest for our retirement. If the income of an individual is from capital gains alone, then he cannot use this section 80C to save his tax. To know more about what is capital gains, you can check out the video on the I button here. You can get a maximum of 1.5 lakh deduction under this 80C section alone. Let's look at some of the examples. Life insurance premium, equity linked savings scheme, employee provident fund, annuity pension schemes, principal component on home loans, tuition fees for children, contribution to PPF account, Suganya Samruddhi account, national savings certificate, tax saving fixed deposit, post office time deposit, national pension scheme. Under section 80CCD 1B, an additional amount of 50,000 is saved on tax if you have contribution towards NPS or Atal Yojana scheme. This is just an icing on the cake towards section 80C. Another tax saving tool is interest paid on home loans. Homeowners have the option to claim 2 lakhs as a deduction towards the interest of home loans which they are paying. If the house property is let out, you can claim a deduction for the entire interest for that particular home loan. You can claim a deduction of 25,000 on medical insurance for yourself, your spouse, or your children. Additionally, you can claim 25,000 for your parents if they are age 60 or below. If they are age 60 and above, you can claim 50,000 for your parents. Also, an additional deduction of 5,000 you can claim on preventive health checkup. Under this section, deduction for rehabilitation for handicapped dependent relative is available. When disability is 40% more and less than 80%, you get a deduction of 75,000. If there is a severe disability of more than 80%, you get a deduction of 1,25,000. Keep in mind, to claim this deduction, you need a certificate of disability from a prescribed medical authority. Under this, a deduction of 40,000 is available towards any expenses incurred during your medical treatment for yourself and your dependents age 60 and below. In case you or yourself is a senior citizen, you can claim a deduction up to 1 lakh. Any reimbursement of medical expenses by the employer can also be claimed under this section. Under this section, you can claim the deduction on the interest on the loan amount. The criteria is this: the loan amount has to be taken from a bank or financial institution for yourself or your spouse or your children. One can claim a deduction amount up to 8 assessment years, and even a legal guardian can claim this deduction. Under this section, homeowners can claim an additional 50,000 on the interest of the home loans which they are paying. The criteria is the loan must not be above 35 lakh, the value of the property should not be more than 50 lakh, the individual should not have any other property registered under his or her name at the time when the loan is sanctioned. This section offers tax reduction to an individual who makes donation to charitable organizations. This deduction varies based on receiving organization, and this can vary from 50% to 100% of the amount donated. These are deductions made for scientific research or rural development. These donations are eligible for 100% tax exempt, and there is no upper limit. The only criteria is an amount higher than 10,000 should be paid in any other means than cash. When an Indian company contributes to a political party or political trust, those contributions can be deduced under this section. Under this section, the deduction is allowed for any individual who contribute towards political party or political trust, and the payment should be any other means than cash. This is a deduction for an individual for any income he receives as a royalty for the patent on or after 1st April 2003 registered under Patent Act 1970. He shall avail a maximum of 3 lakh of the income received. This individual should furnish a certificate which is duly signed by the prescribed authority to avail this deduction. Under this, you can avail a maximum of 10,000 for the interest received on the savings account interest. If this income exceeds 10,000, TDS is deducted from the bank, that is tax deduced at source. If you want to know more about TDS, you can check out the I button here. As per budget 2018, the interest received from a deposit as an income is tax exempt up to a limit of 50,000. After this limit, according to section 194A, TDS is deduced at source. A deduction of 75,000 is available for any individual who suffers from physical disability or mental retardation. In case of severe disability, one can claim a deduction up to 1,25,000. And here comes the additional tip to all the individuals who have home loan in your name. According to section 80C, you can claim 1.5 lakh for your home loan principal amount. According to section 24, you can claim 2 lakh for your home loan interest. And according to section 80EE, you can claim an additional of 50,000 for your home loan interest. This whole accumulates to 1.5 lakh of section 80C, 2 lakhs of section 24 and 50,000 of section 80EE. This comes to a total of 4 lakh where you can claim home loan. If you have any questions or queries about what we have just learned now, let me know in the comments below. I hope by now you will have a very good idea about what are different deductions where you can apply in your gross income to reduce your taxable income. Hope you found this video useful. Give a like if you like this video and share it with your friends who actually file their income tax regularly and who is not aware about all the deductions which are available for us to claim. I'll catch you up in the next video.